Hey folks, my name is Daniel and welcome back to another video. I hope all of you are doing absolutely great out there as always. Here today, I wanted to make a video to touch on what we've seen over the past couple of days, which is extreme fear in the stock market and the crypto market, and just a ton of confusion. And I don't just want to touch on what we saw yesterday when it comes to, what we saw coming out of the Federal Reserve and the market reaction from that, but more importantly, take you through my expectations moving into 2022, what my thoughts are, what to expect, and how I'm positioning myself to take advantage of this year, which with no doubt in my mind is going to be ridiculously difficult to follow and track. So with that all out of the way, let's get into the video here. So first and foremost, what did we see yesterday? Well, we saw the Fed come out of their minutes, their December meeting, issue a statement, and immediately after saw the stock market drop in a major way. S&P 500 down around 2%, NASDAQ, Russell 2000 down around 3%, and a ton of these high growth small cap companies, not even small cap companies, just a lot of the high multiple unprofitable companies fell upwards of 10%, which is just fascinating to think about how much selling pressure needs to be put into certain companies worth billions or tens of billions of dollars to send a stock plummeting that significantly. Now, let's go through the reasoning behind this. And it might be a little bit difficult to understand for some individuals, but let me just try and simplify this. When we look at the United States, and generally speaking around the world, one of the things that drives economies is liquidity and credit. There are two and two essentially. When you talk about interest rates and bond deals, the lower they are, the easier it is to access capital, the easier it is to invest in companies, the easier it is for the economy to function. When you raise interest rates, everything becomes much more challenging. All of a sudden, people aren't throwing money at a lot of these higher multiple stocks, at a lot of cryptocurrencies, which are generally considered more speculative, and companies and assets along those lines tend to fall. We saw this back in, again, 2018 when the Fed wanted to raise interest rates, but actually went back on their decision to do so after seeing the stock market fall, again, in the double-digit range. And what we're seeing here over the past couple of days, past couple of weeks and months is the market try to price in this potential for a raise in interest rates and a raise in bond yields. Now, why did the stock market fall so significantly yesterday? Why did cryptos fall so significantly yesterday? Well, because the Fed went out and essentially just pulled the rug. I'm not just going to read this article here, as I don't want to be redundant in this video, but essentially what we saw was them significantly scale back on their plans for bond purchases and to begin offloading bonds come their first interest rate hike, which we can assume will happen sometime in maybe March to April. This is something that we didn't know would happen. Obviously, the bond market is inverse. When people buy bonds, the yield tends to go lower. It's essentially government debt when you think about it. And when people sell bonds, the yield tends to go up. What we got yesterday is that the Federal Reserve, which has trillions, tens of trillions of dollars on their balance sheet, is going to begin offloading bonds, selling bonds come the next few months, which will bring significant selling pressure to the bond market, leading the yield to increase in a major way. In addition to that, we also got the announcement that they now expect more interest rate hikes over the next few years here, and again, it's really just this paragraph right here. As expected, the Fed's policymaking group, following the December meeting, kept its benchmark interest rate anchored near zero at this point in time. However, officials also indicated that they now foresee up to 3 quarter percentage point increases in 2022 to up around 0.75%, as well as another 3 in 2023, and 2 more after that in the year to follow. So over the next roughly 3 years, we can see interest rates go to, at least at this point, an expected 2%. Now, I know that doesn't sound too crazy, and in all honesty, that's kind of healthy, but going from 0 to even just 1% in the matter of a year can have significant consequences. And that's what we saw happen yesterday, and that's what we've seen happen over the past few weeks and months. A lot of that de-risking. Risk on assets have generally tended to fall when we have these types of announcements. And even not that, we're actually seeing a lot of the large cap companies, which have been kind of significant persisters in this time here, where a lot of other smaller cap companies have fallen, also fall on this news. So when I look at myself and my plan here, positioning myself into 2022, again, Bitcoin has actually recovered here over the past few hours, which is good news. But again, it is still down significantly when you look at like a 7-day chart or something. But when I look at how I'm positioning myself into 2022 to take advantage of this, to understand this, and to kind of just understand what to expect in the year to come, it's going to be a very choppy year. What has the market told us at this point? That it's going to be volatile whenever we get any sort of announcement or slight change to these plans with interest rates and rate hikes. The market's probably going to continue to be confused and, potentially not believe the Fed and their ability to raise interest rates and sell bonds until it actually happens. So expect volatility this year. Which stocks are going to be the most volatile? Well, as I previously mentioned, it's probably going to be the companies that are not profitable, trading at high multiples or potentially future multiples looking out to 2023, 2025 to get an actual valuation, or cryptocurrencies. And that's just the bottom line at this point. These are risk on assets. You're taking on a risk when you're paying a higher multiple. When you're buying a company that is, slow revenue growth, potentially a good balance sheet, but has profits, you're taking on less risk. And those are the companies that are probably going to stay more stable throughout this time, no matter what we see. It's going to be a choppy year. I'm positioning myself to take advantage of any potential dips that we see because of this, because we do have to keep in mind that when it comes to interest rate hikes, when it comes to bond yields, none of this affects 99.9% of businesses out there from the perspective of their business models, revenues, profits, etc. All it changes is the perceived valuation from Wall Street. Giving companies lower multiples de-risks, and that's what the stock market is doing at this point. That's what the cryptocurrency market is doing at this point. And I wouldn't be surprised if we continue to see this potential suppression in valuations, kind of throughout the year here as we continue to get these, again, potential bumps in yields. So when I look at how I'm positioning myself personally, I have, personally, obviously my portfolio has changed here over the past few months as I've, bought stocks, sold stocks, but I feel like I'm pretty diversified in, certain groups of stocks, which, do fall under that category of high growth, high multiple. Obviously, Voyager Digital, a cryptocurrency brokerage, is one that's going to trade with cryptocurrencies. And if we do see a suppression in crypto prices, that is something that will impact Voyager to a certain extent. But then again, you do see some value plays in my portfolio, like Discovery, and which is merging with HBO, which is the real opportunity there, and a company like potentially Corsair, which I think has major potential throughout the year. So obviously, we'll see what ends up happening. There may be major opportunities here in stocks that do get hit for no real fundamental reason other than this change in interest rates. So I do think 2022 will be the year of opportunity, and I will continue to create videos for you all to cover different stocks, different cryptocurrencies, different projects out there, and obviously continue to update you guys on kind of what my plan is and what I'm doing here with just kind of myself and positioning myself moving forward. So if you found some value in this video, please consider hitting that subscribe button. Obviously, bit of a different format here today, but I do think it is warranted given what we've seen. And again, thanks for watching, and I will see you all in the next one. Bye-bye.